This year, the Federal Reserve has been repeatedly attacked by President Donald Trump for keeping rates unchanged. Trump's decision to fire Fed Governor Lisa Cook has questions raised on the central bank's independence and has weighed on the dollar's outlook. That is according to surveys. Take a look at our next report for more on this.
The latest National Association for Business Economics policy survey showed 95% of economists expressed concern about the Fed's independence being compromised by political interference over the next several years. A separate poll of economists by Reuters showed the dollar under pressure from doubts on the central bank's credibility amid political pressure and interference. The Fed has a dual mandate of price stability and maintain jobs growth. Despite Trump's pressure, the central bank was on the sidelines of this year to see how U.S. tariffs would play into inflation. However, the latest unemployment rate near pandemic highs has the Fed shifting its tone towards a rate cut this month. Last month, Fed Chief Jerome Powell signaled that shift to policy easing. However, Trump's repeated interference in the Fed's working has economists and markets worrying on the credibility of the central bank. NABE's survey of nearly 160 economists showed half the respondents are very concerned that the Fed's policy decisions may be significantly influenced by the Trump administration. The survey found the fiscal policy was considered to be too stimulative. 78% economists believe that the fiscal counts of the One Big Beautiful Bill Act outweigh its economic benefits. Many economists express concerns about debt sustainability. A majority of economists favor increasing legal immigration through a variety of visa programs. They say restrictive immigration policy is reducing labor supply and that is expected to negatively impact GDP growth. Respondents also express considerable concern about the potential decline in the quality and reliability of U.S. government economic data. This comes after the Trump fired the commissioner of the Bureau of Labor Statistics after a sobering jobs report. A separate Reuters poll showed that the dollar will be under pressure as a result of Trump's pressure on the Fed. The dollar is down nearly 10% against a basket of major currencies this year. The greenback has been the worst performer. Now, according to commodity futures trading, commission data trades against the dollar have dominated FX markets since late March. The Reuters poll predicts the weak dollar trend to persist in the near term. Interest rate futures show markets fully pricing into 2 Fed cuts this year and possibly another in early 2026. Now, that is also weighing on the dollar's outlook. Doubts about the Fed's future independence pushed Goldman Sachs to boost gold prices to $5,000. Other major banks have also endorsements big gold bets on loss of Fed's independence. Market moves over the last few weeks also suggest a similar trend and sentiment. Business Bureau Report, WION World is One.